Stay with me. Stay with me. To me, your secrets are safe with me, baby. Come to me, your secrets are safe with me, are safe with me.
Açúcar, dogo agale o açúcar, o açúcar, corororora gale o açúcar, dogo agale o açúcar, corororora gale o açúcar. Açúcar.
Grand Rising. Happy Wednesday, guys. All right, we're live. We're alive. Feeling good. Blessed and highly favored. All right. Let's get into this thing. What's up, everyone? What's up, Seth? Amy. Got James Cowens in here. Harshi. Hello, Patrick. Alfredo. Corey. What's up, Joe? KJ. Ibraneth. Hola, what's up? Pierre. What up, Brandon? Sundolce. Lonzo. All right. Perfect, man. I'm grateful to be here with you. What's up, Dan? Estefania, ¿cómo estás? Buenos días. All right, make sure, guys, feel free to, share the stream. Any of your fellow traders. And, yeah, let's get into the market today. So, as you guys can see, we've rebounded super well from yesterday. Yesterday we had a nice rejection off of this last push down here. So it was Monday during New York session. We had a nice little mitigation here. The market rallied from the zone. Dow was a whole nother story. Dow didn't even budge. This thing went just on an absolute rampage yesterday. So really, I didn't really have a buy set up at all up until a little bit later in this session, actually, where it was, where did we have it? Right around here. There's a small 1 minute time frame accumulation. So right over here, the only way I had like my own type of setup here was actually trading out of this area right here, and it just missed my buy. But other than that, yesterday the market opens for Dow. Nothing extravagant. Like we don't get. Here we go. We don't see Dow Jones, get below previous lows or anything. So this is something to be aware of, right? Yesterday, the New York Open only clears liquidity up on the upside. We only clear buy side liquidity. We don't go lower. We don't take out London session lows. We don't take out Asian session lows. We definitely don't come into any of this imbalance or play out of this area. So I'm not going to sell just because, we've been super bullish. But when you do have a lack of liquidity sweeps to one side, we do end up eventually coming back here. So for now, we'll keep this more as something to focus on as a target here eventually. But obviously with all the momentum we've seen up here, could we see reversals today? I mean, it's possible. Monday, continuation. Tuesday, more of a reaccumulation. And today, we are consolidating well upwards in this range. If you guys zoom out a bit more, guess where we're sitting at now? We're sitting really close to all-time highs with Dow Jones all over again. So we're sitting way up here. Back to October 30th, price action. We've already rejected this area a bit, so I'm not looking for a secondary mitigation or anything like that. I think we've already seen what we needed to see. I think we have all-time highs incoming here today, more than likely. So not getting in the way quite yet. Gonna let the market keep printing today. Give us the proper setup in order to get involved. So looking for any sort of sells would be cool. But we need the setup first. We can't just go throw ourselves at this, right? So wait a little bit longer. Post New York Open, maybe we get some action. During London session, we had more of a sideways movement. So here is just London session liquidity. And then Asian session, also a lot of sideways movement. Really not much going on over here. You have a little push down here before the continuation and the higher highs are made. So small move, but nothing very significant. From here, we just have massive imbalance fills. The last really big push down that we got before the market kept doing its thing was right over here. Right over here, we see a nice push down, about 100 points from Dow before it rallied. So if we wanted to get any type of reversal for buys at all, it could be over here. This is the 1 minute. You see a big spike down. This does take out liquidity, and then it rallies. And this is in the middle of New York session. So about 2 hours after New York open, you get a very intentional push down, and then the rally. So this is the first reversal zone for Dow. However, there's this is kind of in the middle of a range. As you, I'm sure, have seen in the past, taking buys in the middle of ranges like this, not always the best idea. There's more incentive underneath, imbalance, liquidity, that big picture, the market could want to break below this. So I'd prefer to trade kind of in the extremes of this zone. And like I've been saying, we're approaching all-time highs. So I'm going to have an alert here if we clear these all-time highs. So for now, keeping it pretty smooth. Let's see the market do its thing. Give us an opportunity to get into this thing. All right. Let's make sure you guys have your accounts logged in. Make sure you have your, whatever assets you trade most often, have those pulled up. If you have any incoming setups, drop them in the chat. Let me know what you guys are have in mind. What's on the radar here. Okay. So that's Dow. As you guys can tell, Dow is not necessarily urgent. No pending setups. S&P, similar in the fact that it has, all the way down here we have something that we could look for. But are there shorts lining up here for S&P? And my thoughts on this is, we kind of had November 3rd, that spike up before it drops. Can we sell out of here? So this is what I want to see now. Is there a key setup right in this range? Looking at S&P. S&P on the 5 minute, you start to see the market take out these highs and then turn back around. So if we were going to look for shorts, looks like it would be in here. We can get into smaller detail as well, but this is where it starts to pick up and then it drops. So now we want to understand, have we gotten to this level yet? Have we traded to this price action? And that brings us to the present. And the answer to this is yes. So we did just tap this zone and reject nicely. This is the mitigation of this area. So great. We've already seen the market reverse out of here. In the same way that we saw, remember, this is November 3rd. This is last Monday. And this sets up where we have seen NQ. NQ had come back to this zone already. So NQ getting into November 3rd price action is way up here. So right now what we know for sure is that NASDAQ is kind of slow, is way slower on the way up. S&P, Dow Jones, they're trading way up here. NQ a lot slower. So the fact that we already got mitigations from Dow Jones and S&P, I think we're going to end up getting a lot more bullish momentum today for NQ. And it can go and catch up to those areas. So what could play out today? If we're looking at the market, and when the market came into here, this is where it rebalanced this. We saw a nice push down here before the continuation. So can we see a reversal from this zone? I think we might see a buy from NQ from right here. So that's kind of my perspective today. We're moving sideways. The market with NASDAQ clears liquidity, so trades into these London session lows. Comes back up here. One last push down before it quickly comes right back up. So this looks like it wants to create lower lows, but then it fails to do so. So buys out of here, I think, can make sense. We see NASDAQ come down to rebalance over here. So this whole section is pretty efficient, and we saw the market trade right back up into this zone. So I do like buy ideas right around this area. And YM going upwards and Q going down. So they're moving in opposite directions. It's inverted correlation. When they're not moving in the same direction, I typically just trade them independently. So I am definitely open to buy scenarios here with NQ. We're not too far from entries here. Here we go. Just tagging into the zone. So, all right. So I'm taking a position right here. Just entered. Order filled. Now from here, we then have another set of positioning, which is got clapped right away. Now the other low that I like is over here. So here we have the Asian session low clearing out into this zone. And then you have a little bit more price action and then getting down into this level. So playing through here, this is more sideways, more liquidity, but you do have a nice spike down into this area. And then you see the continuation. From here, what's Dow doing? See there, yeah, they're going in opposite directions. So look at where we're at with Dow. Dow has officially hit all-time highs. Okay, let's keep an eye out if we get a shakeout developing here. Now that it's cleared all-time highs, let's see if that turns into something. So we'll stay tuned on that. Meanwhile, we have S&P obviously moving a little bit slower to the downside today since they're moving in opposite directions. Okay, so to break down how we have the market developing today, let's look at where could the market really go to. We had a spike down here. Market moves sideways, builds up liquidity, leaves some imbalance. Okay, great. A little bit of imbalance here, nothing too crazy. So sideways movement, imbalance. This was just a huge sell-off before the market reverses. A little imbalance here. Here we start to see healthy price action. Rebalancing, comes up again, fills this imbalance. Let's see where we're at. Here's where we see the market spike down. Move some sideways some more, get into some imbalance. So, is there really a clean textbook setup here for NQ? Not really. Yeah, not really. It's pretty simple, pretty straightforward. We get the only reversal that we're seeing at the moment. Like here, we get that big spike down, and the market, bounced back up. So does the market want to swap from sellers to buyers here? Maybe. So is it evident, the setup here? Not really. It's not screaming at you like, yo, take this trade. You got like, go, do it now. No, not at all. So if there's not a setup just jumping at you here, there's really nothing worth taking. The lows that we got from yesterday with S&P happened here around 10:30, 10:21, 10:24, started to drop before it flew. If you look at NQ, that same moment happened over here. So the big reversal really is right over here. Like this is the one last push that to me kind of makes the most sense. S&P still trading way up in this range. Not a whole bunch to do. As you can see, equal lows are being set here. And then Dow Jones is still blasting off. So, yeah, I mean, this was the end of New York session. Trades down into this level. Here you have like the beginning. Here's the low of Asian session. So the Asian session low. The market reversing out of this zone. It's a possibility. I don't think it's like it's a high confirmation setup because the liquidity it sweeps here is pretty minimal. It's only 30 minutes. So looking to trade out of here, I don't think it's high probability, especially considering we're just in the middle of the range. So I'm okay with waiting and seeing a play lower in this zone. I do want to keep considering how the rest of the market's moving. YM still pumping like crazy, and Q still dropping. So it looks like the sweep here. So when the market cleared these lows and traded higher, once we had demand here, this is honestly why I felt like, okay, we're just going to reaccumulate and run. But apparently that wasn't the case. And now the market playing into Asian session low. The question is this more of liquidity? And is there more incentive to push the market even lower and trade towards the low? Yesterday's New York, this massive push down. This is a big sell, right? This is a big order that opens and pushes the market down. We don't really get back here we haven't gotten back here yet. So I would say the highest probability reversal is going to happen over here. The trade that has the highest probability of staying within the structure is if the market gets to here. But the market may not get down into here is the difference. So cool. I'll have an alert here if we get into the zone. This is not a massive sweep. So if you're going to take any positions here, I'd say tread lightly. That's my take there. Yesterday, we talked about shorting NZD. This played out super well. Of course, it wasn't something I took because of how it was looking compared to like the Australian having to sweep liquidity. That's what it was in my mind. I was looking at this taking out highs like it just did right now. So we just got the mitigation earlier as well. Again there. And then no other setups at the moment anywhere near price action with majors. So still waiting it out there. I know we're looking at, possibly buying gold or silver. Silver finally cracking 52 without getting me in, sadly. So that's still going crazy. So no sells for me yet. Definitely not any buys either. We've seen oil finally work its way down after cracking liquidity here. So during New York session, it ended up peaking up into this zone. I feel like we had talked about this before, but having the market sweep liquidity and then work its way down. Yeah, I didn't take an entry yesterday. I guess one more. I just didn't follow up with this. But at this point, huge sweep up, market moves sideways and then works its way down. When's the new contract for oil? Is there one soon or no? Next week. All right, cool. Yeah, so oil finally back on track to work its way down to here. If we work our way back up here at some point, I think we could look for shorts as well. Continue the move to the downside. But we'll see if that's going to be the case. But hopefully you guys kind of see why the market rejected here. Massive move to the upside. Clears liquidity. Liquidity build up. So retail sellers here. There's imbalance left behind. And then your stop would go up here. Plays out of the order block. This thing just melts off. Peso. No pullbacks quite yet. And then after squeezing yesterday, Bitcoin finally woke up during London session to come back up to here. So Bitcoin buys. Here's that last push down before the market rallied. So we can keep our eyes on this. Okay, let's see. Going back to indices today. All right. NQ about to work its way further down. So we're now sitting at Asian session range. Here we have liquidity as well. This is the low from Asian session. And the market obviously has inefficiencies down here and a massive sell-off. So if you're going to play, this is within the range. You're about halfway through this. So if you throw a fib on this thing. Starting to trade below the 50% pullback. Right over here. Taking a position, like I said, it's not my favorite just because we're in the middle of this thing. There, in my opinion, I think there's a bigger, as a magnet to this huge sell-off than for the market to just bounce out of here. So if you have that desire, then do you believe, I guess the question you want to ask yourself is exposing your account to risk at this price, how much would you be willing to expose it to? And second of all, is the need to be in the market here because you think you might miss out? Or is it just a very qualified setup? That's how you have to approach this. So there's liquidity. There is a push down. There is liquidity. So is this going to give you the bare minimum? Is this going to give you a full reversal out of here? Is there enough cause for an effect? That's a really big thing to understand. Is there enough cause for an effect? Would enough liquidity send the market straight back up from here? And I guess that's the big thing to consider. Is it going to be the case? And I don't think so. I feel like, yes, we squeezed a whole bunch here. The squeezing here was what led to this continuation. But would that lead to a reversal now? I don't think so. I think here you have tons of retail sellers, so the market and buyers, so the market can squeeze and then can take out a whole bunch of liquidity. But on the other way around, is there enough retail buy liquidity that would cause a reversal? And I mean, in a way, if we think about it, Yes, buyers got taken out here, 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 and now here. So that is a pretty good amount to cause some sort of reversal. It just took me a little bit too long to come to this conclusion now. So yeah, it looks like we're getting a decent reversal out of this zone now. It only might be the bare minimum. So for example, just looking at the kind of movement that we're seeing already, pushing back up to here after dropping, like that might be it. All you might sometimes you get is just the bare minimum. Now, if you think, well, I don't think this is mitigated completely, I think he could still go more, then cool. You still have a shot at it. Be my guest. I just think that we have a much bigger reversal probability with the market being over here. So to refine an entry, if we do end up taking, being able to ride this thing out, where would I look for buys? There's kind of two zones. You see how we've seen resistance over here, here, here. These can function as reversal areas for the market as well. And then the same way we've seen support pretty consistently at 65,525 in the past, right over here. This could also function really well as an entry. So right around here looks like is where we could see a decent setup. This is a slightly bigger stop than I would really want, but this could work. And then just filling the imbalance, playing into New York Open would be almost a 4R potential. Now, before I make any other decisions here, Dow Jones is still just going up. So we're still moving in opposite directions from one another. And that could continue to be the case. So we may have a situation today where, in, 15 minutes, 30 minutes, an hour, we could see this start to rally while Dow starts to go down, or they end up getting on the same page like they did yesterday. So, yeah, I'm going to hold off, and I'm going to wait for this kind of moment. Okay. All right. So this did its thing. And right, so like I said, if we're trying to get big reversals, you need big money. And now we're getting a lot closer. All right, here we go. So pushing down, getting even closer now than before. All right, here we go. Would have been great, right, to have this sell. And we had an idea over here, but just not enough. All right, so tapping into here, there's a little bit of traffic here. Of course, there's always the possibility that the market wants to play off the open. If it does and it just reverse, that's possible. It would be such a way bigger stop. So buying out of over here, the risk reward for me is not great. So I would much rather have a lower entry than that. So I like entries basically from below 25,550 is where I like the possibility for a buy. But we've already seen strong levels of support here in the past, so this could just reverse out of here. Chasing this, never a good idea. If you're banking on this trading off the open, and you want a good risk reward, that's where you can tighten your stop. So I know some people prefer, if they trade off the open, then they'll use some of this price action. Like for example, here you had this little move right there. So then I've seen these types of setups because you're basically banking off of an order block and the mitigation all in one. And then if it goes, let's say it just mitigates this. So here was like, 50 points or so. So let's say it bounces 50 points, then you manage your stop. That's one idea. That's not how I trade, but that's how I've seen it. My thoughts are that we can see a buy from these areas over here. Oh, you know what? Looking into the smaller time frame, this does look pretty efficient though. Like push down, comes back up, fills this imbalance, comes back up, fills this imbalance. This actually might play out of here instead. The only thing we don't have yet is this right there. You have one more push down before the market rallied. The only other thing is that S&P is nowhere near any of this. But S&P is also kind of split in the difference between Dow and NQ. So I wonder if we see, because now here is where S&P has that kind of final push down before the rally. The plot thickens. All right, now we're getting into this zone. This is what what we were looking at earlier with NQ. So bouncing out of here, or even taking out Asian session lows, taking out this where it was kind of squeezing. There it's going. So looking at the small time frame here, seeing how we got a little reversal pullback. This does give a decent reversal into this zone. This might be it, honestly. So at this point, right, you kind of have a choice to make. Either if you don't believe the market's going to work its way down to this imbalance, and though you look at the market, you go, this is pretty efficient. I think this is all we're going to get, and you're going to get the reversal out of here. Then you make your choice. So in my opinion, this was like a 50-point drop. So if it's going to reverse, it's going to reverse about 50 points or so. The big picture is this massive sell-off. So does the market, at what point do you want to take the position? Better risk reward is obviously lower. There is still, we didn't quite play out of the structure here. So could the market get back into this imbalance? It's definitely a possibility. Seeing S&P maybe clear Asian session low. That would be definitely pushing the market closer to liquidity sweep with NQ, and then setting up towards a mitigation for liquidity sweep with S&P, setting up to mitigate with NQ. That makes a lot of sense. Or you go a certain risk here. So you take what your total risk is. Let's say your total risk is $100. You could take one position here with, let's say, a portion of your risk, let's say $50, and then you take another position down here with the rest of your risk. So that is another option that you could take if that's going to be your bias with this idea. Market's struggling to go, so I understand the setup here. And in terms of backtesting and all that good stuff, what I don't really have is enough data for like trading off the open and using these structures to make something, to make it worth like, hey, this is what I would take with, thousands of dollars of risk. Not really something I have enough evidence on when looking to trade mitigation setups out of the open and using the smaller time frame structure. So this is kind of like the two approaches I would have, which would be something like this. Now we're seeing the mitigation of this move down. So this was like 49.50. What do you get? 49. Just about the same thing. So, for example, let's say you would have taken this setup in here somewhere. If I was in this and I had taken this play, I would have tightened my stop to here now. I would no longer have the same amount of risk. This way, if the market does come crashing down, cool, like I still have the rest of the trade to take over here. That's how I would approach this. So this now risk would be like cut in half or so. Something like that. Again, this is more speculation at the moment. This is just, I don't have this as an entry model quite yet. But every once in a while, you do see setups like that play out pretty nice. Okay, here we go, working our way down. S&P working further. Dow still pushing higher. Great. All right. So you might be thinking, why take NQ buys and not just wait for S&P to get down to the zone, right? Why not? Well, when NQ and YM, in my experience, when NQ and YM are not on, they're moving away from each other, S&P doesn't tend to make the right, like completely get to where it needs to get to. So it typically doesn't get to like key zones. It kind of trades in between them. So that's why I'm not necessarily forcing anything here. With S&P, I would just prefer to work on NQ and then just deal with that. That's because of the data I have. But if you're going to wait for S&P because, you have a setup further down, then do it. Follow your trading. That's the most important thing, is you have to be able to live with your trading, right? I'm just showing you guys what I'm doing, what works for me, things that are backed by data, and they don't work every time either. Clearly, you guys saw me get clapped instantly over here. So, yeah, I mean, we're getting pretty close. Would love if we get a little bit lower here. And we're able to get some clean reversals out of the zone. Ooh, Bitcoin got really close to because this would be aligning, Bitcoin and NQ at the same time. That would be that would be nice. But it just missed the zone. But I wonder, Okay, interesting. Now that this missed by just a little bit, I wonder if we end up getting. Because I would love to see Bitcoin tap into this and then reverse. But right now what we saw was a massive imbalance fill from London session here. comes right back up. So you see that you have Bitcoin. There's just not a lot of demand down here. So you're seeing the market wants to trade up here much more. So if Bitcoin gets down to this level, and then we can get NQ in zones as well, yeah, I'm going to like to pull the trigger there. Still nothing from me with NQ. Is anyone else already taking trades here? Are you guys staying out of this? What's the bias here? How we feeling about this? Or are we just staying out completely? Man, YM, Jesus. YM is just going crazy. For me, since we already mitigated this, I'm not looking to trade anywhere inside of here. I think that there's just more incentive to go lower. All right, let's look at the chat. What's up, Jesus? Staying out. Respect that. Gold short scalps. Waiting for NQ lower. Took MES short. Nice. Clean. No, they didn't say one that was instant clappage. All right, cool. Gold short scalps. What's your yeah, I mean, I've never really had any intentions for scalping strategies. I just have never been able to find a good consistent entry model like that. I see a lot of liquidity here, so I think I'm not looking to sell anything. Yeah, there's tons of liquidity here. Honestly, across the board, there's money everywhere right now. Okay, so NQ bouncing back up again. S&P similar, and now Dow is starting to push down a little bit. So like I said, look at how these are moving so differently. Dow goes down, and Q goes up. So when would this trade be? Let's say, how do we know? Oh, we missed the setup. If this thing keeps ripping 112 points, then we missed the setup. So like right now, this would have to push a little bit further, which it totally could. If that's the case, then, I mean, we could have a different setup. Had a nice push down. Now we're getting above here. Yeah, if we create some demand, maybe we can look for another buy position now that we've shifted structure. Or this is just one more pump before this thing starts to drop again. Yeah, this is that first real move upwards. So this can definitely create FOMO as well. I'm pretty patient because I think if Bitcoin gets down to here where we saw like the last sell-off, then out of here, if now we get a reversal with Bitcoin, I think that would open up the window for indices to run just with no problem. So I'm curious if we work our way back down there or not. Yeah, so gold, bunch of liquidity. We do have a nice push down here before it rallied, but buying gold, I'm less interested in because silver is just going crazy. So if you guys remember, I wanted buys with silver under 46. It just played out the open instead and then ran. So this is that example, right? We talked about what I talked about with NQ, how like sometimes you have it play out of an order block right away. So here, silver played out of this open right there. Here you have an order block right at the open. So you could have had an entry here with the stop loss down there, and then instead of this whole thing. And if you get stopped out here, then you have, the second setup to take at a lower position. So these kind of plays, from what I'm observing, are like tight plays. Half risk might be a better approach with examples like this, where you're going for a mitigation, but you're using the order block as the entry and the stop, maybe even a little bit more open. But yeah, something like that could be a value in the future if like that's how the markets are set up. Anyways, with that being said, obviously this thing is on fire here, and I do think we have a pretty clean setup with silver. We saw quite a bit of liquidity Monday's New York session, going into the second Asian session and London session. We see during yesterday's New York session a clean push down. Market sweeps liquidity. Then we see the market continue. We're currently trading bullish, and we've traded above Tuesday's New York highs, Asian session highs, London session highs. This is fully bullish trending. So silver plays here, looks solid, and this trade would have been complete. So had we gotten the entry we wanted, wow, would have been epic. And to give you just the RR on what I was looking for, this is what the trade would have looked like with that secondary model playing out the open and mitigation. This might have been a 100R trade. Nah, looks like maybe like 30. 28R trade. Would have been crazy. So, all right. Got NQ here. Indifferent. Bitcoin chopping up. The buy here looks good. Honestly, it might be better to just focus on this and not even deal with NASDAQ at all. It's just it's in its own lane. ETH pretty similar. I mean, ETH it could be either one, right? We have ETH that could work its way into this area. It honestly looks like ETH is a little bit slower to drop than Bitcoin. Let's see which one gets there first. You got Sol as well. Big market cap crypto player. So wait, we're waiting. We're hanging out here. Well, we got that going on. Let's look at what's how the stocks feeling today. Okay, Weeble getting a little momentum, waking up, wakey. Hello, buddy. Lucid still dropping. Snap pushing. Let's go. All right, so if you're in Snapchat, guys, we have now recovered and we're up about 20%. Sick. 20% push there. Chipotle, little bounce today. Sony with some nice movement. Honestly, airlines didn't do anything. I thought we were going to see a drop. They didn't care. It was irrelevant. Solar, getting back up to speed here. I'm still holding ENPH. I'm going to look for a nice liquidity sweep here. See if we can clear some of this. And then I still have my target here at 72. It's just taking forever. Coinbase with a decent bounce. I have my alert here, so I'll let you guys know when I get in on Coinbase as well. Add some more there. Lyft was sad. Lyft was very close to getting us in, and now it's up 100%. Fuck yeah, brother. Okay, cool. Your snap option contract is up 58%. Sick. Nice. Let's go. All right. NASDAQ right now, it looks like our idea here that it would play off of this sell-off was valid. So played out of the sell-off, right? The drop was 49 and change. It makes this initial move first here, which is about that exact amount. So either way, I don't think I would have held on to this. We haven't fully mitigated yet. This came up about 90 points before starting to drop. The real sell-off is from up here, about 112 points. It looks like this is what we're getting, right? S&P a little bit slower. And then now YM is starting to push down a little bit. I don't have any entries on Dow. I'm not just going to assume it's just ready to go there. I would love to get into NQ buys. Not sure if it's going to happen anymore. Did anyone just take the trade here and have their stop down here? This is a bit of a bigger stop. Looks like almost 90 points. So the RR isn't quite as glamorous. You'd be sitting at almost a 1R right now. Meanwhile, we still have ETH and Bitcoin. I mean, this might come back. Nice. Yeah, good stuff on that option. I took a buy off of a fair value gap and had my stop under the fair value gap on NQ. Or on which one? Or within this range here. Here we had a nice little sweep down. Came up, little push again. This is really efficient price action. So maybe we get under to like here. Yeah. Nice. So is this maybe... Okay. Clean. I could see maybe we get another pullback to here before the rally. Yeah, I could see us. Maybe we'll pull back into here. Market continues. Now you're seeing this shift in momentum, right? Nice, another push down to here. Rebalances, rallies. You have, kind of like this area here. Little 15-second guy. Okay. All right, let me pull up just crypto in general. Take a look at winners. Biggest winner I'm seeing right now is Dog. At least on my watch list, almost 10% on the day. And we like to see that. Creeping to 0019. All right. Some of these meme coins getting some volatility, smaller market caps. Link trying to bounce back. Okay. Cool. Now look at this. NQ dumping. Coming right into there. Still got a bit more in order to technically mitigate. So if you wanted to take a play out of the imbalance, obviously, you have potential here. And then, playing into this New York Open kind of is where it makes the most sense overall if you're an NQ longs. Otherwise, maybe this goes lower. still got, like we mentioned earlier, that perspective on Bitcoin or ETH to make it way all the way down to here, right? So if we make it down to here, then we could see this. Now what I could see here, it could be a shakeout though. Kind of clears these lows and then rips. So yeah, Bitcoin buys gonna wait until this gets up to here, down to here if we get a position. Otherwise, like, cool, this thing can run. I can run without me. Okay. NQ, I think here we go. All right, seeing, right, we had imbalance there. Here's the big push down before the market rallied. We traded up here, pretty decent. A bit of structure for a little bit. What is this? Uh, 11 minutes or so, 10 minutes. So taking a buy here, because we still have to mitigate fully, but that would be because you believe that this push down was one final liquidity sweep before the market rallied, and that would be the validation for a buy. That's what you're, at least if you're interpreting this through smart money principles, that would have to be your understanding of this to validate a buy position from this area. That's the only way I think you could make sense of an idea here. And look at this, the flip here. Now, S&P is actually more bearish. So that probably means that Dow Jones is starting to fall. Yeah. So look at how the plot has shifted here. So if you do think that this move here was the sweep and that the market now would rally, then you would be looking for buy positions for this to overall mitigate. Or the other idea is that this pushes lower and trades from a lower zone here. They're different trades. These are two different trades. So if you're going to take a setup in here, then I would have my stop here. But if you're going to either you take it here or you take it lower, and then your stops here, you either, this runs, works out, or you get stopped out, and then you look for the actual mitigation of the bigger zone here. Working its way down. When we look at Dow, right? So Dow now has been working its way down. We're seeing this push lower and lower. Obviously, New York Open is over here. So the first area where you could see a reversal from Dow would be here. Not that I would trade this, but like here's where we're going to run into the first order. So market could just reject this and then continue on up. Especially because when you see all-time highs like this, it's in price discovery. So, for example, this went 300 points above the previous highs. So think about it. During this time, there's people wanting to short. A lot of liquidations happen when the market gets above these highs. So at this point, especially now that you get like your first pullback, what tends to happen? starts to drop. So the incentive is, okay, now it's falling. Let me chase the shorts, right? Let me chase these sells. And then from here, especially now that it's playing into where we saw an original, here was where the price started to dip. So this starts to lure in sellers, resistance, goes up. Then the market comes back down to here. Now it's using this as a floor. So not for me, there's no confirmations for entries here at all. Like, I just wouldn't want to be involved in this. Bitcoin approaching reversal area here, getting real close. ETH, same thing with ETH. All right, so there's Bitcoin, just tapped the zone. Perfect. I wouldn't take a position on Bitcoin until ETH gets here. That's just my take. That's my point of view here. We need another little push down. All right, so here we go. I'm just here looking at what this would look like contracts wise with Bitcoin. All right, cool. ETH got below, starting to bounce. Okay. BTC, little rejection so far. All right. And Q holding up within this structure. If you're trading this 1 minute setup here, then not quite mitigated fully yet. It's getting there though. All right. ETH needs to drop a little more. I'm pulling up a setup here for Bitcoin. All right. And Q doing his thing. All right, so check us out. See how we're now seeing the push down, 50 points here. Starting to get that move, those just about 50 points. So if you get a little bit higher, just about ready to protect your trade there. ETH, we basically want this below 34.53. Let me check out the chat. You have any hood? Robinhood? Nah, man. Robinhood's a sad story. I just keep watching it. That's it. A sad tale. Here, I think I have it marked up where I wanted it. I wanted to pick some up here below 29, and yeah, it was just short of that. I chose to here specifically. This was that April drop, which was the low for a lot of things. Yeah, this was. I bought other things, so I'm not really too upset about it because like I picked up quite a bit on April 7th, so it's not like, you know, there's only so much ammo that you can have unless you're, you know, worth hundreds and millions and billions of dollars. But yeah, the powder was running a little dry for Robinhood here, unfortunately. But yeah, that would be almost a 5x at some point. Yeah, basically would have been a 5x. Yeah, it's been wild seeing stocks outperform tons of crypto. But like that's why Webull is kind of the one I'm looking at now, because it's part of that, we'll say, family, if you will. So I think that's why I think we can get a nice little move. Our little bounce so far. So we're kind of getting a move on so far with these. Not mitigated fully with crypto yet, so could still get positions there later. Not rushing and being patient. Oh, I found that the best trades come when I'm patient and wait for extreme liquidity sweeps. Absolutely. So seeing that sweep once more would be something that I believe would be best entry. Not rushing. I love that. And I think if these didn't meet certain trading conditions for you, then yeah, waiting it out for an entry at a better level, fantastic. And that's a practice in itself. It's just, okay, what part of me is driving behavior? Am I rationalizing an entry? Am I rationalizing an idea? Am I okay with missing out on the trade completely, but that doesn't lead to chasing anything? These are all things that are required, and these are things you have to ask yourself consistently. Otherwise, like, if it's not something conscious on your mind, then you're done. So this is what, you know, you got to think about, and being disciplined to your plan in real time. Like, you have to be able to do that. Like, when we consider the pros, the cons of certain situations, when you ask yourself, all right, where is this? Like, I want to take action in one way or another. Right? Here's some action that I want to take, but why do I have this happening now? And the difference between traders, I think, who make it and those who don't, it's not really the setup. It's the ability to actually follow the plan when the market, it seems like it's playing games with you. And yeah, so that's kind of what we're going to be teaching in the Breaking the Habit Accelerator. If you guys didn't see yesterday's setup or yesterday's video, in the school community, there's the full video that you guys can check that out. But if you guys haven't seen it, right, we created the Breaking the Habit of Breaking Your Plan workbook. It's not just a book, but it's a workbook. You have 11 chapters fully prompted, so you can work on your own trading. And this is broken down to 11 different chapters. So how to set goals, like for traders specifically, most traders set goals wrong. There's a lot that you know, but you're not doing. Why is that? So how do we fill that gap? How to use, so people know the 5 senses, but people aren't aware of their higher faculties. And these are, I'd say, beyond what senses are. They're what you use to make decisions. And so anyways, there's 11 chapters in this, and that's what one of the things that the big thing is when you know what you should do, but then you do it anyways. You do the wrong thing. You choose your ego. You choose your expectations. Instead, all these things are constantly getting in the way. And so for those of you that want to, make sure that you're getting the most out of your trading and that you stop getting in your way, if you haven't checked out the book, you can go ahead and do that on your own. Like just, have the book, work on it yourself. Otherwise, right now we have 20 more spots for the cohort. It's going to be a 6-week thing. So it's going to be 6-week live, and we're going to be doing facilitation sessions. So more than anything, we're going to be working on it together. We'll go through the workbook. There'll be feedback sessions. You'll get one-on-ones with your journals for the next 6 weeks as well. So if you want to know more and if you want to join the cohort, there's only 20 spots left. Then I'll go ahead and I'll drop the link here in the chat for those of you that want to run this together with us. I know if you're already doing this with us, let us know. It's right here. This is going to be a 6-week program. So if you guys are interested, check it out. I just dropped the link here in the chat. And that includes the book. That includes 6 weeks of going through this together, 8 sessions live, and then the one-on-ones with your journal so you can see. The whole goal is for your discipline score with your trading to go from wherever you are right now to be able to have 80% minimum discipline with your trading. So definitely check it out, guys. And if you don't do that, like if you don't go from where you're at now to having over 80% on your discipline score, and you show up to at least 5 of these sessions and you send the journals, then you can do the next cohort completely for free. Our goal is to get you to be a better trader no matter what. So check that out. I know we already have about 20 slots filled. So there's about 20 more. So yeah, definitely recommend you guys. If you're going to do this, drop a 7 in the chat already if you're going to be part of the cohort for the next 6 weeks. This starts on Sunday. So on Sunday, we'll do the first one, and we'll get this started. Also, if you do the cohort, this will go towards your syndicate as well. So if you do join the cohort, what you pay for the cohort will go towards the syndicate. So yeah, check that out. The link is there to join. And then, we'd love to have you guys. So yeah, we got Harshi, Sandolce. Sweet. Awesome. All right. So while we're waiting for this, is anyone in NQ buys at the moment? Or are you guys sitting on your hands? Look, we're seeing Bitcoin starting to do its thing. So the sell-off with Bitcoin was this. 454 points. This is basically mitigated. Okay. Solid. Yeah, if you just want to do the workbook, you can do that on your own. You can totally do that on your own. You don't need to do the cohort. That's just so that's a higher level of accountability, and it's also a qualification process to go into the syndicate. We want to make sure we're working with people who are doing the work. ¿Qué opinas de liquidez debajo de NAS? ¿Dónde? Aquí no hay liquidez. There's no liquidity here. Or you're saying under here? ¿Debajo de esto? All right. Yeah, if you have a setup you want me to look at, drop it in here. You can go ahead and drop it in here. House Republican Derek Van Orden of Wisconsin is riding his Harley Davidson. What? There's no way. Yeah. Julián, bro, por aquí. Big picture. I'm in. Yeah, I'm sure at some point we will. Actually, what is big picture? Because big picture, we don't really have liquidity either. Bitcoin did its thing here. All right. Well, in the meantime, what are we seeing with... So Dow, look at this. Dow now starting to go further down, slowly but surely. It's been pushing downwards. That's, keeps kind of wicking S&P further down. Meanwhile, NQ is just kind of chopping back up and forth. So this can be one of those situations where if Dow is going to melt down, if everything is now moving correlated, if everything's moving together, then for sure we could see NQ dump. The thing is, you can't always tell. Right now, it seems like that's going to be the case. All right, now look at this. So let's go to the 1 minute. Let's look at price action here. This current candle is going down. Like everything is pushing downwards together now. So it does seem like we're going to see the market get to our original zone here. And we could look for a play. But, all right, now here's where things get complicated. And honestly, is why I don't love trading during these days. Sometimes these could be moments where you just end up doing nothing. But now, all of a sudden, the market's working. It's on the same page, right? So we're seeing, for example, S&P just took the Asian low, okay? Trading into and taking out some of this sideways movement. But now it's cleared Asian lows. Okay. If everything's going to move in unison, and now this is all correlated, well then buying in Q, which that's already very bearish, if we already have like this massive imbalance here, if YM is going to pursue this and push this lower and everything's moving together, there's a little bit less probability that NQ buys are going to hold, right? On the other hand, same thing, even if you're taking NQ buys, is YM going to be the best case scenario here to take? So now all of a sudden, these buys don't seem to have the same type of probability like they once did, right? So right now we're seeing liquidity sweep with S&P. I love that. And now we're pursuing the zone over here. Perfect. So now it all is lining up. Now it's in the zone. The question is this. If you're going to take this trade, is it worth it with YM potentially wanting to rebalance all of that? That's the question right now to consider. What's it going to be, folks? So here, I'm taking this with a bit less risk. I am in there. And now that we're seeing everything on the same page, my question, I wonder, is if are we going to respect this as an order block and the market is going to bounce or not? Because these, for the most part, were moving very independently up until like this last moment. So considering the fact that we have NQ nowhere near these all-time highs, I feel like there's more incentive for NQ and S&P to pursue these highs than there is for them to go lower. Like if we just zoom out big picture, S&P has a lot more to go. Like there's such a divergence, there's such a difference. This is trading way up here while S&P and NQ are way over here. So at the moment, trade is out active. And for us to get to mitigation, we would need, remember this drop was about 112.5 points. So I would want to see the market basically crack these highs, trade over on here. So far, we've seen this bounce about 40 points. Decent. And then where did that take Bitcoin? So look, we finally, like I said, mitigated here. Now we got lower. And where did that bring us to? ETH. Now ETH finally gets here. So you're seeing how it's lagging behind. Now ETH is finally at the zone where the market can reverse. Sol is in the zone where things can reverse. So I think we now get reversals from cryptos now that they're in this zone. Now it's more valid to get reversals from here. And we can see the market want to bounce from these areas. All right. Sweet. Look at that. NQ. Beautiful. Beautiful. Stop was about 60 points. Right now we're up about 1-to-1 so far. Okay. So with the rejection like this, clearly it looks like this is a smart money entry. Like the way it's playing out of this, it's filling this draw, like this massive push down, instantly filled it. So, I mean, looks like a mitigation exchange of money to me. This is at least 78 points. Not quite the full move like we saw over here, right? This would be the entire drop. But definitely substantial amount, right? As you guys have seen before, this whole move was 112.75. If you want to manage this in your own way, feel free. If you're like, you know what, I got a good entry, I'd rather not add more risk to the table, then cool, do your thing, move your stops. Based on my plan, like I wait for that distance to happen in order to exchange money. And then as you can see, the majority of the movement happened with NQ and S&P, not with Dow. So manage this as you would want. If you want no risk on the table, then have no risk on the table. If you want a little bit of risk on the table, do as you please. All right. Anyone take ETH or take Bitcoin, but just at a lower price? I know if you're trading futures, it's like trading ETH kind of sucks. It's like you don't really get too much out of it. Okay, so fantastic. Starting to see a good reversal. Okay. Let's let this thing ride. I think minimum, we clear liquidity here. And then if it's going to keep going, that's a different, that's another story. But, yeah, the target for me right now is just playing into this imbalance here on the day. Let me know in the chat if you decided to take this. If your stops are at break even, you're in. Okay, sick. Yeah, it took a little bit longer to get in there, but we're in there. Beautiful. All right, let's see. So from here, I have 16 contracts open per account. on MNQ. And so, yeah, I'm looking to take it to here. If we clear these highs and then we maintain demand, I'll end up tightening my stop a bit more. And the biggest danger, if you will, to this is all of this imbalance. All of this imbalance is what could cause, the market to reverse significantly. I don't think that's going to happen, but at least the way that we're structured now, and the way that this rejected, this is not like, oh, cool little bounce. This is like big money came in here. There's really no way around that. And then we have the added benefit of, I think, seeing ETH or like Sol, just seeing alts mitigate from the zone. Yeah. So right now, who can tell me what is happening here? Why is the market stalling right there? What would you call this? I want to see, like, if you guys, for those of you that have, read the Smart Money Playbook, what are you guys looking at when you see something like this? What is retail? How would someone that trades like that, how would they be perceiving this kind of moment? Mitigation? No, retail. I'm not saying this over here. I'm saying like the fact that we're rejecting this area here. Baiting in sellers on the retest. Exactly. So this is doing that. Break and retest. So this is definitely luring in to, okay, hey, we have resistance. Guys, retail would be opening sell positions. So the natural place to have stop losses if you were in sells would be above here, and specifically above here. If you're like if there's 1 minute break and retest type of trading. So that's why I think if you wanted a conservative exit, just taking out these highs or these highs is your first, location, right? That's like your first exit, high precision, higher probability exit would be taking out these. Because this is definitely, it's luring in sellers. You get the movements like this, like there's 30 seconds from this candle to close. Oh, look, it's going bearish. It's finally engulfing, opens to sell. Then the market flips. And all of a sudden you see it rip. And the longer you see squeezing like this, so look at how we were moving sideways for about, 45 minutes? More, 50 minutes? Liquidity buildup, clears it. Now we have liquidity all up in here, right? 20 minutes or so of resistance, retail sells open. Now it's doing more of the same areas, same prices. So if this is going to rip, it's building up a drastic amount of liquidity for that to happen. And the more liquidity, the bigger the move. So same thing here, right? More liquidity, move sideways for about 50 minutes. Clears it. Now that there's enough money, the market can go and do its thing. There's enough money for a move like that. All right. Okay, so here's what we'll do. Now that we're, at a position where I think this could be managed, you either move your stops to break even, you reduce risk. Maybe you didn't do any of that and you go, well, this hasn't quite done what I needed it to, so I'm going to keep my trade open. This went only 80 points or so, rather than the 112 that I have projected minimum. So maybe you're thinking, well, what if it comes back down again? And looking back over here, the market played into this imbalance, right? This is what our thoughts were, that the market would play into here. That is what it did, and then has now rejected. What else could the market want to do here? You know, what's the other incentive for the market here? To clear lows and play all the way down here. So understanding what the market, what incentive it might have, you may be asking yourself, is it even worth having this much risk on the table at all? Right now, we're seeing the markets holding up here where we've seen this last point of supply. So where you've seen support right here, a little bit of an order block. Typically, if the market's going to bounce, it's going to bounce out of the area that it's in right now, like right over here. And then from here, you would see the continuation, because you got this little guy right here. Okay, ETH bouncing. Looks like we're starting to get a little bit of a mitigation out of here. Let's see, ETH push down here. They move up. Should be around like up here or so. So there's incentive for the market to go. Now we're seeing S&P playing into here as well. All right. So, guys, what I'm going to do here, I'll leave you all to it. Been here for almost 2 hours. Manage this in the way that fits your plan. My exit is going to be, considering all the liquidity that we've built up with sellers here, I think there's been a lot. Like, I'm very much open to letting this ride out. And if it goes, awesome. If it doesn't, that's okay. Part of the plan. But, yeah, keep me posted, guys. Let me know the outcomes here of what you do today in the chat. For all of those that are joining the Breaking the Habit of Breaking Your Plan Accelerator, remember, we start on Sunday. We will stop taking spots once we fill out the next. I think there's now 18, and then that'll be it. Anyone that wants to do it, we can do it in the next one. You'll be on the wait list for the next cohort, so we can go through this together. The big thing when you're looking and just considering making changes is, what kind of implementation are you making? If you're not doing it for whatever reasons, then, maybe an accountability group is something that you need, or maybe connecting the dots between what you think you know, but your actual trading is all of the difference. So with that being said, guys, I'll catch you guys on the inside in the community. We'll see you guys there. Thanks for joining as always. Appreciate you guys. If you're not in the free community, scan the code on the left. And then if you're looking to level up your trading and have a full 1-year commitment to that, then scan the code on the right, book a call, see if coaching is right for you. But more than anything, just stay involved. Use your resources, guys. All right, don't sleep on it. Take care, y'all. I'll see you all here, same time, mañana. Peace.